It is Tuesday, February 7th, 2023. A lot to talk about today. Markets just closed a little while ago. Another miracle takes place. And when I watch markets do what they did today, this concerns me. This scares me more than if the Dow Jones went down 500, 600, 700 points today. Watching the manipulation or the ignoring of what is happening to the economy, the ignoring of what the Fed chairman said today, and yet still going up. Please comment down below. Let me know what you think. Why did the markets turn around and go up today? Dow Jones, when I woke up earlier today, was down around 100 points. Markets across the board down. And then all of a sudden, Jerome Powell comes out, speaks. In fact, he sounded somewhat hawkish, in my opinion, saying that the Fed is going to have to continue raising rates. And he said a few other things that we'll talk about. But Dow Jones and markets go from being down to being up. Dow Jones closes up 265 points today. NASDAQ up 226 points. What is going on? This almost, to me, is more concerning when you watch markets acting this erratically versus maybe Dow Jones going down 500, 600, 700 points. This, to me, is even more concerning because there's something going on behind the scenes. But Jerome Powell went on to say that strong labor market reports, if they continue, we may have to do more and raise rates. And it seems to me as if the markets were just ignoring this. Jerome Powell seemed to stay hawkish, like he has been saying. We're going to continue to raise rates. We have concerns. We're going to have to do more. Yet markets seem to be ignoring this. Let me know your thoughts on this. But absolutely shocking to watch this reversal, yet again, another miracle on Wall Street, as these markets just continue, in my opinion, to ignore reality and to ignore what the Fed is saying. Now, they still believe that he's going to pivot, he's going to slow it down. We're going to see how this plays out. But Jerome Powell, in my opinion, didn't give the markets any good news today, really. And yet they go up. The hedge today, the annual interest rate payment on government debt is $850 billion and rising fast. At the current pace, interest on U.S. government debt will be hitting $1 trillion. Think about that, $1 trillion just in interest. It says here, before a dime is spent on roads or infrastructure or anything else, the first $3.7 trillion, which is transfer payments and interest on the national debt, has already been spent. Transfer payments are redistribution of money for which there are no goods or services. An example of this would be retirements. So just think about the servicing of this massive debt that is taking place, and it's going to be going to $1 trillion here very, very shortly. And just every time the Fed raises another 25 basis points, that's huge when you're talking about a national debt of $31.5 trillion. 25 basis points of $31 trillion is a lot of money to service. Here's another one from the hedge. U.S. trade deficit surges to record high in 2022 as China flows rebound. The U.S. trade deficit for all of 2022 rose 12.2% to $948.1 billion. This is the widest gap on record. And so we watch the markets go up today, but look at the servicing of this massive debt. You look at the trade deficit. We have a $382.9 billion trade deficit just with China. And many of you could say, well, you know, we got the balloon the other day, but China got the manufacturing jobs. China's got the economy. China's got the gold. China's got the future. And anyone that doesn't see what China is doing, doesn't see the power of China, and that China is more than likely going to have the world reserve currency at some point. They are going to run the world. If you don't see this, you are drinking the Kool-Aid. They are setting up to be the global superpower, and I think we could argue right now they probably already are. The four biggest banks in the world, biggest military, biggest amount of physical gold on planet Earth, biggest cities on planet Earth, biggest, I mean, they really have the biggest economy. They manufacture things. We manufacture debt. And so I really think, unfortunately, it's sad to say, the days of America being the world superpower are on borrowed time. And it's really, really sad to watch this take place. Because once China takes over, they're gonna be the world superpower for a very, very long time. And I know that there's talk that, you know, we could go to war with them. China would beat us economically. I don't even think we could go to war at this point with China. We're so dependent on China. And look, I don't have anything against the Chinese people. I don't have anything against China. Now, the government, that's a whole different story. They don't seem to be very nice. But this is reality, and this is where it is all going. They are manufacturing. They have the economy. They have the workers. They have the real money, gold, and they're planning for the future. And unfortunately, here in America, we have a service sector based economy. 70% of the US GDP is based on consumption. How long is this sustainable before it isn't? But to think that if we got into a dispute with China, that America is going to win that dispute, I find that hard to believe, just due to the fact that 80–90% of our pharmaceuticals come from China. So much of our plastics, aluminums, come from China. This country, in America, right here, we're importing so much food from other countries. We are so dependent on other countries, especially China, for just about everything. Plastics, lithium. You know, we talk about you know, going EV. We talk about the windmills. All this stuff is all coming from China. The minerals. China's mining minerals all over the world. So when you need the lithium, the cobalt, etc., where do you think it's all going to come from? It's going to come from China. So I think it's going to be very, very hard at this point to do anything to China. I think China is going to do whatever it wants to do here very, very shortly. And once they invade Taiwan, we're going to see exactly what America thinks they're going to do about it. I don't think we're going to do much about it. And look, it hurts me to even say these things, but we have become a very weakened nation. Zoom to lay off 1,300 employees. It's about 15% of their workforce. Markets don't care. They just continue to go up. CNBC, 82% of millennials, first-time homebuyers, have regrets. Here's how to avoid most of them. Here's some of the millennials, 82% first-time homebuyers, some of the regrets. Upkeep of the home, too much money. They bought sight unseen, another big mistake. Remember, this is all the FOMO that we watched take place over the last 2 years. They paid too high of an interest rate. Not educated about home buying. Bought a home in a neighborhood that changed too much. Bought a home in a bad location. Didn't anticipate future needs for a home. Bad neighbors. The mortgage is too much. Home value decreased. We're going to see a lot more of that one. So at the end of the day, here's one thing we could all do, and we could all exercise patience. This FOMO of going out, buying Lamborghinis, buying high-dollar luxury watches, buying a house, this now is going to come back to really bite people as they find out that the economy is going bust. Prices of everything pretty much continues to go up. And now people are going to figure out that the FOMO that they got sucked into, bamboozled, fooled, tricked, they should have exercised patience, and now they're going to have big regrets. And many of these people are going to land up losing these homes, no doubt about it. And they're going to learn a very valuable lesson here. And the people who are going to make out are going to be the people who buy these homes from these millennials who overpaid, didn't know what they were buying, didn't know where they were buying sight unseen, buying with no home inspection, just wanting it today and not realizing that a year from now they're not going to be able to afford this thing. So there's going to be losers and there's going to be winners. The losers are going to be the people that bought these houses, paid way too much. The winners are going to be the people who come in and take advantage of these bad decisions. Home buying companies stuck with hundreds of houses as demand slows. This was on the Wall Street Journal today. Ribbon Home Incorporated, the New York City-based startup, they purchased they purchase homes on behalf of buyers. It says here, it then sold the homes to the buyers at the same price plus a fee once the buyers got a mortgage. This made their clients' offers much more appealing since sellers prefer cash and quick closes. So this company would go in, make an offer on this house, close it in 10 days, probably cash deal, got a a better price on the home because of cash and a quick close, and use that for negotiating a better deal. Well, so now what happens is the buyers, the home buyer, may not be able to qualify for the mortgage because rates have doubled. So that's a big problem for a company like Ribbon. Orchard Technologies, another power buyer, what they do is it helps customers by buying a new home and moving in before selling the previous home. And if clients can't sell their home within 4 months, well, Orchard buys that home. So now they bought up all these homes that they can't unload from their clientele. So now they're trying to sell these homes. So Ribbon and Orchard Technologies, these two power buyers, both have problems where Orchard bought up all these homes, cannot sell them. Ribbon bought homes on behalf of their clients, and now the clients may not be able to qualify for the mortgage. So now Ribbon owns these homes. So this is just more of what's happening out there, and some of these companies that do this. So you think back in the day we had creative financing. Well, look at how creative this is. And now these companies are going to get stuck with all these homes. We're going to have home builders stuck with homes they can't sell. Ribbon's going to be stuck with homes. Orchard Technology going to be stuck with homes. These power buyers going to be stuck with homes. Flippers going to be stuck with homes. So there's just a lot of things happening out there in the housing market. I mean, I didn't even know that companies like this even existed. And this is what people are doing to buy a home right now. It's pretty incredible. But just going back to what happened today in these markets, please comment down below. It's just absolutely shocking. When you look at the debts, you look at the deficits, markets going up, we have a crumbling economy, layoffs continue, and we're seeing more cracking in the housing market. I just don't see this ending well, ladies and gentlemen. And I know that people are gonna, they're happy today. They're celebrating. The cavalry rode in and saved the markets again today, and everybody's feeling good. But a lot of people aren't feeling too good because they're on the verge of losing their job, or they've just lost their job. Bed Bath & Beyond, about 3 miles from my house, they're getting ready to go out of business. They're going to be one of them, so we'll have another vacancy here in Palm Springs. More people losing their jobs, less tax revenue for the city. It just goes on and on and on. But I just don't see the good news, and I hate to be pessimistic. As many of you know, I would much rather be driving around in a yellow Ferrari, making car videos, going to Cars and Coffee, going to the incredible car shows in Orange County, and having a great time and laughing and giggling and just enjoying life. But this is so important to me, and I'm so passionate about what is happening to the state of this economy, what's going to happen to people, my friends, family, people who watch this channel. I'm concerned. I really am, and it's very hard for me to just go driving around in a Ferrari, filming it and having a great time while people are suffering. And that's why that is going to be put off until things get better, if they get better. Unfortunately, I think we're in for many, many years of a downturn here. I think that we're going to see some serious pain here. Yet markets continue to play their game. It's just such a detachment from the markets and reality. While so many people, the economy, the debts are exploding, the deficits are exploding, the quality of life for people, it's all going downhill. There's so many problems, from prices of everything going up to food shortages, a food crisis. It's very hard for me to joke around about this stuff. It's hard for me to laugh about this stuff. It's hard for me to do any other video other than this, because it's so serious. This is why I don't really get into sports. Nothing wrong with that if you're into that. Nothing wrong putting balance in your life. I get it. But right now, this is so important. I'm so passionate about it because I'm so worried about what this looks like 5 or 10 years from now, and what your standard of life is going to look like 5 or 10 years from now. And that's why right now we've got to be doing everything in our power to get ready for this. And it is about preparation. It is about preparing mentally, physically, spiritually, and financially right now, today. What you do today determines the outcome for you tomorrow. And if you do nothing today, you are going to get absolutely obliterated here, because nobody's going to look out for you. The system doesn't care. The stock market doesn't care if you lose your job or your house. In fact, it likes that. Right now, unfortunately, you are on your own, and you have some serious decisions, some serious choices to make right now for you and your family. And this is the time right now to be sitting down with your family and talking about what's happening, what's coming, and what you're going to do about it. Everybody's situation is different, but everybody's going to have to do something in order to get through this. Otherwise, you stand to lose your home, your pensions, your retirements, everything you've saved up, your savings, everything, and especially your future. So get ready for huge losses. Get ready for very, very difficult, tough times ahead. This is going to be a very, very bumpy road, ladies and gentlemen. And watching more of this garbage today, where the markets go up on top of all this news I'm sharing with you, on top of all this data, on top of the debts, the deficits, the trade deficit, don't you have to ask yourself, what in the world is going on here? How are they doing this? Why are the markets ignoring reality? Why are they not reflecting what's really happening in the economy? Why are they not reflecting any fundamentals? All of that's gone. This is the twilight zone at this point. So be very, very careful. You can't even believe what you see at this point, because what you see looks good on the television. Oh, markets, earnings, recovery, job numbers, this data, unemployment down. It all looks good. Believe a half of what you see. Believe half of what you see and nothing that you hear, ladies and gentlemen. It's so imperative right now that all of you do your own due diligence and really dig down to see what's going on, because you can't believe what you see. You can't believe what you hear. So you're going to really have to get involved here. And that's why so many people who are addicted to sports and video games and just doing everything other than paying attention to what is happening to this economy in this country. If you're not paying attention, this is a game that you're going to lose. But unfortunately, it's the game of life. This is a real serious game. This is reality. And if you lose this one, you could lose it all. So for the sake of you and your family, pay attention. Get involved. Understand what is going on. Question things. Start thinking outside of the box, and make sure you're getting out of the system the best that you can. God bless all of you. Please like, please subscribe, and share these videos. I look forward to speaking with all of you very, very soon. Thanks again for watching. God bless all of you.